Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel, Dennis Dick. Joel is on vacation this weekend, but we'll survive without him. Busy show today. We have made it to earnings season. Thank God. Citigroup earnings just out. So we'll talk about the biggest earnings from today, set the table for the week. We have the Facebook news that they tries to squeeze past us on Friday at like 4 o'clock. We'll talk about that. Talk about a lot of ratings today, a lot of upgrades and downgrades on some surprisingly big names. So we'll get through the biggest list of upgrades and downgrades today. And our guest at 8:35 is Eric Krull, manager and founder of Krull Asset Management and the co-author of the Lifecycle trade. He will join us at 8:35. Dennis, how was your weekend?
Weekend was it was nice. It was actually a really nice weekend for weather-wise, except for Saturday morning. I had a best ball tournament, and we haven't had rain like up in this area in like 2 weeks. And of course, you get out there and you're on your third hole, and you see the big black cloud coming at you, and you're like, uh-oh, that's trouble. Anyways, it turned into a lot of trouble, started downpouring on us. Hang out under a tree, that's always good to do in a lightning storm. But quickly we realized, looking at the radar, it wasn't going to blow over fast. So got on the golf cart and zoomed to the clubhouse, had an early lunch, hung out there, had a beer. Hour and a half later, went out, and it was sunny. So it worked out okay.
There we go. All right.
And we won.
And you won. So
that's always good.
That's all that matters, right? The only thing that matters. So
I don't know if it matters at all, but with the best ball tournament, but we somehow won. But it was protested because we had 5 people. So, anyways, we were only supposed to have 4, but somebody showed up and they didn't know where to put them. So the convener there put them in our group. So I mean, it wasn't like our fault. So, anyways, they didn't like it that the group that won had 5 people. So that was my weekend. How was yours?
Oh, it was fine. I went to see the Spider-Man movie.
I heard it was good.
It was good. It was nice. There were some twists I didn't see coming. It was very pleasant.
That's always good.
Went on a boat. I don't normally do that, so that was nice. I had a nice, relaxing weekend.
I was on a boat too.
Yeah, there we go. Hey,
that's pretty much every weekend. I like that.
Got you. Yeah. All right. Let's talk about Facebook here. They are.
We're not going to talk Citi.
Okay, you're right.
Come on.
Citi out at 7:58.
Citi just came out
5 minutes ago. Citi's out. Q2 EPS beat and a sales beat. $1.95 versus $1.81 estimate. Sales 18.76 versus $18.49 billion. So a beat and a beat for letter C.
I mean, every earnings season we pretty much see the banks beat, and every earnings season it seems like a few hours later they start to go into the red. Is that going to happen here again? I don't know. I mean, it's happened so many times. Are people looking for it to happen now? That would be the question too. Like, I mean, I immediately thought fade because it's faded usually always fades on its earnings reports. But I don't know. It's trying to hold up here. It was a good beat. I mean, it's a beat. But again, I think everybody kind of expected this to be okay here. So just looking here at the book, it's always fun to look at the book. 73 is 50,000 shares. 74, 40,000 shares. There's nothing too much. 72.50 at 30,000 shares. I'm looking at the New York book. 72.10, 32,000 shares. I mean, it's already traded 185,000 shares, so it could chew through all that stuff very easily, which it is doing, obviously, in the pre-market as well. Up 1%. I'm not chasing it, though, because I've been burned chasing bank stocks before on okay earnings, so I'm not chasing it.
The CFO was at a conference a month ago, and he said that so basically trading revenue would likely fall by a percentage point in the mid-single digit range from a year ago. Haven't looked into the report enough to look at where they made their money and the different line items, so I don't know what their trading revenue did. We know that's trading revenue and probably the revenue from their loan book. Those are the 2 most watched items on the report. I haven't looked into it enough to see really, but expecting that the revenue would decline, trading revenue, and in spite of that, I don't know if it did, but we're up. So
okay, so I'm looking here, 72.81, 72.80. It's a breakout over 72 if it can stay breaking out, but just be cautious again. So I'm not going to break down the investment banking. I know was down year over year, but it was a beat. Just be cautious here because when you look at it, every time these banks seem to rally, it seems like those rallies start to fade.
You seeing any movement in the peers here? I mean, they have yet.
Well, yeah, they're all trading up. I mean, the banks all move here. So Bank of America, Citigroup, UBS, they're all trading up here. Goldman Sachs, they're all up, a fraction of what Citigroup is up because Citigroup is your leader. But obviously, that's the issue.
All right. There was our Citigroup headline. Let's go now to Facebook. I want to talk about this one because they tried to squeeze this one by us Friday afternoon. Facebook essentially agreeing to what is a fine of 1 month worth of revenues. The FTC has reportedly approved. Actually, I think, is it official now? I don't even know. I think it's official. A $5 billion settlement with Facebook related to all of the privacy charges they have been charged with over the past year or so.
Facebook is trading up a little bit Friday night. It's giving it back a little bit here. It seems like every time this pulls back, it's a buying opportunity. Everybody likes it because the crypto thing that's coming. Ever since that news was announced, the stock has been just going straight up. It was pulling back on news again, even on Friday, and it closed at the highs. So I'm going to say the same thing. I think every time this thing pulls back, still buy. Still have it in my long-term portfolio. So I'm still bullish Facebook, even up here.
This will be one to watch, especially tomorrow. We're scheduled to have several congressional testimonies regarding Libra on the docket tomorrow, and I believe maybe the next day. I'm not sure, but definitely tomorrow. So we'll be watching this one on tomorrow's show closely throughout the day. We should hopefully get more clarity, at least from where the government stands on Libra. And any information is new information because there is so little out there about this thing. So this will be one to watch this week for sure. Facebook.
Okay, I got to go for 1 minute here. I have something going on. Spencer, you're going to carry this by yourself. This is pressure because Joel is not here.
Wow.
But you're going to carry it for 1 second. Talk Amazon here. It's Amazon Prime Day.
They wanted Amazon.
It is up $10. I was long Amazon coming into the day. I've already sold in the pre-market though, because often you see that thing rally up ahead of Amazon Prime Day and on the day. And it's doing that again this morning. It's up $10.
What's interesting about this Prime Day?
So Spencer's going to talk. I'm going to be back in 1 minute. I don't normally do this, but I've got an issue. Back one.
Dennis is gone. What's interesting about this Prime Day, a couple things. First off, it's 2 days. That's notable, but it feels like this year more than other years, all the other retail companies are trying to compete with Amazon and trying to piggyback on Amazon's Prime Day. So eBay has deals, Target has deals, Walmart obviously has deals. I'm sure there are other retailers that have deals out there, and it just feels like everyone is like piggybacking on what is essentially a made-up holiday, and Amazon's Prime, the success of Prime Day sort of made it into a thing that everyone has to hop on now. I feel like a sucker in this thing. I don't know if I talked about this last week, but my Prime subscription renews at the end of every June. That's probably not an accident. I was given it, I got a free month somehow, and now I have Prime. And every year, end of June rolls around, and I say, I'm going to cancel it, because then I never use it. And then I say, wait, let me just wait till Prime Day. I'll do the Prime Day stuff, and then I'll cancel it next year. And that's happened for like 3 years in a row now, where I've paid for my Prime. I almost never use it. And every June I say, okay, I'll use it for Prime Day. Maybe I'll watch a show or two, and then I'll cancel before I renew it. And they get me every year. I'm like 3 years on now. I'm such a sucker.
How much is it?
It's $120 a year. I'm such a sucker. And
paying
so
like the Costco membership, basically.
Right, except I don't use it.
There's a lot of other people out there maybe that don't use it too.
I'm such a Prime sucker. I don't even use it.
This Amazon's smart. They're smart.
Yeah, they are.
I mean, the stock is back here. Come on. It's back at all-time highs, basically. Again, I know we're not quite there at 2050, but we're right there. So the stock is resilient. FANG is back, really, when you think about it. We haven't talked FANG itself in a while, but we just talked Facebook and we just talked Amazon. We might as well look at Netflix and Google. Netflix had a little bit of a rough day on Friday, but really it's been holding on okay. And Google has come back significantly from its May lows there as well, although still off the highs. But it's back. If you throw Apple in the mix, which sometimes they throw the extra A in there, obviously it's come back here too. I mean, the leaders of 2018, 2017 are starting to be the leaders here again. this market has been led by tech. We've been talking about that. A lot of your tech stocks making new all-time highs. It's also been led by consumer staples, which is a bit mind-boggling because often there's a reverse or an inverse correlation there with the market and consumer staples, but consumer staples continue to go up. And then you have other sectors that have just been in the gutter like retail. But anyways, just jumping back into here to the Amazon chart. I mean, how do you really fade this stock? You know, yes, it's Amazon Prime Day. Yes, you do have a high at 2050, but I mean, it's come back and eventually it just feels like this stock is just so loved. It's every new ETF that gets listed and seems to own Amazon. I just don't see why, you know, what's a catalyst to really sell it off.
Guess how much money Amazon made, well, estimated that they made from Prime Day last year.
Probably crazy. How much?
Estimated number, because they don't actually tell us. So it's a best guess scenario, $4.19 billion.
Yeah. It's a cash, well, it's obviously a revenue generating machine.
Oh my gosh. So they made I think the first Prime Day was in 2015. They made $0.9 billion. And in 4 years, they've quadrupled. So
how far is that? It's got to be close to. Now, Microsoft, I believe, is the most valuable company in the world now, correct?
It's changing all the time. I
know. So it's Microsoft. We know Apple was there for a bit, and it sold off. Microsoft was there. Google was there at one time a couple of years ago. I still think Google's eventually going to be the most valuable company in the world.
At the moment, it's probably Microsoft.
Yeah, because Microsoft stock keeps going up. You just can't stop that Microsoft stock. Anyways, it's, you know, it should have been a tell, I guess, when it wouldn't sell off back. Even if we went back into December when everything was selling off so hard, Microsoft, yeah, it went under $100, but it held on a lot better than the other stocks. And again, of course, it leads the rally out because it was showing the most relative strength back in December when they were selling everything. You know, there's something to that, looking at, you know, what is strong, what is holding on, because when the market starts to turn, those are usually the stocks that take off. But Amazon, I mean, it's been coming back here too. It hasn't kissed the all-time high here that we got back to a year ago in July, but it's pretty darn close to
it. Do you have Prime, Dennis? We haven't even talked about that. You don't?
No, I don't. I don't.
You're not even gonna go to Amazon.
I don't pay the extra stuff.
Yeah. Okay.
I don't order enough on Amazon. My wife probably should get it because she orders stuff on Amazon all the time. But
I
don't order anything. I don't need anything.
Well, when
I have everything I need.
I'll update you guys tomorrow on how much useless crap I bought today, which so far.
Have you already bought a useless piece of crap?
No, I haven't, and I'm getting off the Amazon.com right now. I'm not going back on there.
He saw they're doing the radio show, but he's also buying.
Don't even want to look at what's going on there. Okay. Let's talk about this Galapagos deal with Gilead here this morning. So Gilead is investing $1.1 billion in Galapagos.
Yeah.
GLPG here. This is not the first time they've done this. I believe they had a previous investment a few years ago. But didn't type the ticker incorrectly.
Well, they're invested a pile more money into it.
Yep, and it is an ADR, or an ADS, excuse me. So
and it's already trading, obviously, actively there. It's up 24 points on this. So, and you know what? This thing has been popping for the last week and a half too. So I'm not sure if this was rumored already or if there was something else going on. I don't follow the Galapagos story very closely or at all, but I can tell you that chart, it was not taking anybody by surprise here because everybody's been buying this thing up for a week and a half. Up 24 points, you're up 16%. Gilead's hanging on. Sometimes when you see these stocks, put these big investment dollars in, sometimes they get hit, like Constellation Brands. And obviously when they put the money into CGC, which is another story we're going to talk about in a minute, they got hit on that. So you wonder, could Gilead get hit on this? I don't know how big of a deal. How much money are they putting into it?
1.1 billion.
Yeah, it's pretty small, peanuts. So it's probably not going to affect Gilead itself that much, because Gilead's obviously a pretty big company there. So it's not a big.
But this is fun though. This is fun because normally we talk about M&A and the trade is almost always over. By the time we talk about it, the trade's over, except for those M&A arbitrage traders and the rare times where there's some regulatory issues. But
on the deal, but this isn't a deal. Right. They're just putting
exactly. Well, that's my point. This isn't a deal. Yeah. This is an investment. So there is still meat on the bone here because no one's going off the board. So this is going to
get a trade. It's not like it's trading up to a price to takeover price and
exactly.
It's over. There's going to be some action here in both directions. So I'm not chasing it up 24 points. I've never made money chasing stocks, especially one that was running 10 points before the news. But Gilead here is just hanging out. Might think it's going to go down. It's actually got an upgrade today. I believe Wells Fargo upgraded Gilead.
Oh, somebody did.
Yeah, somebody did. I'm going
Yes,
from my memory.
It was Wells, and they raised their price target to $88.
I mean, so that's going to hold the stock up too here this morning. But again, small deal, so I don't think it's going to get really whacked on that GLPG. Like, think the Cisco Acacia when that happened. I know on the initial, that it got hit, but this isn't a deal either, so it's just an investment. So I don't know if it's going to affect Gilead that much, and the upgrade's going to help it a bit. Gilead just hasn't done anything. I mean, this is a stock that absolutely goes nowhere. Like, low out to the monthlies. I mean, this stock has been trading between $60 and $80 for 2.5 years. It's, obviously we know one of the major drugs, is going off the board or there's issues there. 3.79, they've been looking for growth. That's why they're scrambling around trying to invest in this, invest for that, because they don't have the growth that they used to. And that's why the stock just basically is just sitting as a cash cow here now. Yes, it makes money. Yes, it has a nice dividend, but the growth isn't there. So people aren't interested, and it just doesn't go anywhere. So I don't know what's going to be the catalyst. Like, they had the purchase of, I believe it was Kite, wasn't it?
Yeah, that was 2 years ago.
Yeah, and that we kickstarted the stock a little bit, and that's when I sold my Gilead. So I had Gilead in my long-term portfolio, and on that Kite, when it popped up at 10 points, I was like, you know what? This is one of those sell-on news deals where they have to go buy growth because they're not doing it internally. And I think eventually it's come back down. It did. I'm not in Gilead. I have no position in it. I don't intend to come into Gilead here. There's just no reason for me to get interested in this yet. Until you can show me something, how you can, find other ways to grow here instead of scrambling around trying to invest a little bit over here, invest a little bit over there. The growth just isn't here for me to get interested in.
Yeah, Gilead actually hit its all-time high right around the time I joined Benzinga. So since I've been here, it's been pretty much all downhill for Gilead.
Yeah, it hasn't really done anything.
No.
We do have a deal though, if you want to talk M&A for a second.
We do have a deal. I was about to go that route. CRZO getting taken out here by CPE, Carrizo, acquired by Callan Petroleum in an all-stock deal.
Yeah.
CRZO shareholders are receiving 2.05 Callan shares for each share of Carrizo that they own, worth about $13.12 from Friday's close. And that is the story of this deal.
And they are punishing the acquirer in this one. So interesting, you get the acquired stock trading up 10%. The acquiree is trading down 10%. So immediately knocking it down, Callan Petroleum, CPE, that's actually going to trade down near a 52-week low. I believe 557 was the low back in December. And we're going to challenge that here this morning. All these oil stocks, I have pretty much eliminated almost all oil stock exposure in my portfolio, like the traditional dirty oil stocks. And the reason is that I think the world is eventually just changing here. And, you can look at USO, you can look at oil, and yes, it's come back, but it seems like the oil stocks themselves always seem to lag. There's some exceptions there. Chevron has held up fairly well, very well, actually. Exxon's held up okay, but some of these smaller oil companies have just struggled. Even when oil comes back, it seems like, they get a little bit of a lift, and then when it starts to go down, they fall twice as hard as they went up. So it's just been a really tough trade to be long oil stocks for a long time. Even, recently with the recent rallies here, you'd think, oh, all my oil stocks are probably doing okay. But they're not. I mean, they just seem to just not go up as much as oil does when it's going up, and they seem to fall off faster when oil's going down. I just think the world's changing. It's trying to get cleaner. Global warming, I believe, is an issue. And I think it's just not long term for me. I'm not investing in dirty oil stocks.
I do have some, my oil exposure is all the like whatever's in the S&P, right? So the biggest names are what I own, but
I mean, I have an exposure through my index funds.
Right. But
like S&P is going to own a little bit, so impossible. If you own SPY, it's impossible to eliminate the exposure altogether. But I don't really own. I'm trying to think of any oil stocks that I own straight up here anymore. Like I used to own, and some of them are trying to diversify. Like Suncor in Canada has got wind farms all over the place. They're trying, but that's very expensive. And they're trying to get away to try to get to cleaner energy, trying to figure it out. But I mean, it's just not cheap. It's not a huge money maker for them. It's probably a money loser here off the hop. So it's a difficult transition to try to get to that. But I mean, when you just look at the performance of some of these oil ETFs, even, they haven't done well. I mean, yeah, XLE has come back, and you can say, okay, well, it's not up that much, but it was $100 back in 2014. So if you invest in oil back in 2014, you're down 50% in the last 5 years in a market that has went straight up. So, that's the more concerning thing. And I've talked about this in Canada too, because Canadian stocks are like 29% oil. I think that's the main reason Canadian stocks have underperformed, because the majority of Canadian stocks are commodity based, and oil has just not been doing well really over the course of the last 5-6 years. I mean, you think about it, we used to be $150 a barrel, $147 a barrel, and now we're sitting around 65 years later, or 10 years later. I guess I was back in 2007. So it just hasn't been a good long-term investment. Short term, it's going to get pops. You can always trade it. I trade everything too, and I will trade these things. But long term, it's been a tough investment.
I mean, the USO monthly chart speaks for itself. So
it does, but USO has a contango issue too,
yes,
though, so it's not always going to follow oil. I mean, and this is the one thing we try to stress on the show: just flat out investing in stuff like the USO, you're paying cost of carry all the time. So it's got a natural, deterioration where, if oil's up 10%, the cost of carry could be 10%, your USO could be flat on the year. So just because oil's up 10% doesn't mean USO is going to be up 10%. It does not work that way. Cost of carry is very much an issue there. So if you are investing in oil, I do like the oil stocks better for that reason, but I just don't want to invest in oil. I think you got to get to cleaner energies. I mean, solar has started to look good. Spinner was talking about this on the show. I don't know where Spinner's been. I haven't seen him in the chat the last couple of days, but Spinner, if you're out there, hi. But he was talking about how well TAN has performed, and even looking at the individual solar stocks, they've started to come around. I mean, First Solar is starting to show life here again, at least the last little bit. You've had Run, you've had a lot of these other solar companies, CSIQ, TAN covers them all. They've actually been on quite the run. I mean, I wonder, just longer term, if it isn't still a trade to buy like solar cleaner energy and short the traditional oil.
TAN is the best performing non-leveraged, non-inverse ETF to date.
There you go.
Year to date, number one.
There you go. And I mean, there's a reason for that. I think its market is when you look at this, $18 to $28 this year. That's been a hell of a, that's impressive. So I don't mind. I don't know if I want to chase her to a certain extent, but it just seems like the trend is your friend, and the trend continues to be higher on this. And you think logically, like as a long-term investor, I just try to apply logic. And you think about, these global warming issues, and we think about, water, potentially rising, the polar ice caps, and there's all kinds of stuff. It's an issue. I mean, there's people out there that say it's not an issue, but I believe it is an issue. And I believe there's a lot of other people, investors, that believe it's an issue too. So if they're looking to get to cleaner energy, you think solar, you think wind, you think, not traditional, black oil. So I think that's, being said in the last 5 years, at least in the last couple of years of the market performance. So that's my thoughts.
Is this also a long space tourism trade? Should we be going long Virgin Galactic just to get off this planet?
You want to do that anyways.
Just to get off the planet, Dennis. Just to
escape. We've messed up this planet so much, we need to escape.
Just to escape.
To have figure that
but it's all part of the same
Start
trade.
investing Lockheed Martin again. I mean, those stocks have done well. Maybe we do need to escape.
It's all the same trade. That's my point.
All the same trade. Planet's getting destroyed. We need to get out of this planet.
Yes.
So I remember reading something, and I'm a little bit of a space geek too, and I butcher it because I'm not a physicist. But I remember hearing that, hey, if you had global warming on Mars, that they could pollute the hell out of Mars, they could make it eventually habitable in 50 years. So the problem that we have on Earth would actually be a solution to living on Mars, because it would warm up the planet or something.
Great. That's
and
great.
Create an atmosphere, and they're trying to create a better atmosphere and figure it all out. So I remember watching a little show on that. It's probably on the Science Channel or something. But anyways, obviously all conceptual, but.
That's great to hear, nonetheless. All right, let's move on to the other earnings that we have. Actually, there aren't too many this morning, but we did have Organigram. This one, pod stock, recently traded on the NYSE, or upgraded to the NYSE.
What's the symbol on that one again?
OGI. And the earnings for last quarter are 7-cent PS loss, down from a 3-cent gain last year. Sales, big jump year over year, 24 million versus 3 million a year ago. So huge year-over-year sales growth, as you would expect with the legalization of cannabis.
Okay, so about 1 week ago on this show, I went on a rant on pot stocks, and I basically said they were all sells, in my opinion. I sold my last of my Aurora cannabis. It was the last one that I owned. I sold it last week too, which was a good sale. I just think the story is over. I was saying the buzz is over. We've had Alan Brodsky. I think it was 2 weeks ago. I went on the rant and saying I just think valuation are ridiculous on a lot of these companies, and competition is coming. And the competition, we had Alan Brockstein on the show a week ago, and I asked him a question about licenses. And there used to be 30 licenses in Canada. There's like 200, and there's still more coming. So, I mean, it's just, you know, the easy money that they had, you know, where they were keeping the competition out is gone now. Competition's coming. Prices are going to come down. You know, you were paying, you know, $2-3 billion valuations on some of these companies for a greenhouse full of pot plants. It just, you know, the greenhouses themselves are maybe worth 5 or 10 million, and they got power plants in them. And yes, they're worth something, but I don't think they're worth 100 or 200 times earnings, or you almost got to value them on some sales because they don't have earnings. I just think that this story, the valuation is going to become an issue here now. It hadn't been an issue for a long time because they had the story. It was all good, but I think now you're coming into an issue where valuation is just too much on all of these companies, and it's coming to roost. And I mean, CGC, Kramer was trying to pump that all last week on CNBC, and he could not keep the stock up. It just kept going down. Horrible day for it again on Friday, down another $3. You know, you can just go through the list. You know, obviously there was the one company, I forget which one it was, which had you know, issues there where they were shutting down their production. We talked about it. Which one was that one again?
That was a Curaleaf, right?
I can't even remember who it was.
Yeah,
Friday
it was ago. No, it wasn't Curaleaf. I'm sorry. Was it Curaleaf? No, it was shit. Why can't I remember? I don't know. I'm just goldfish.
I know I can't either. In any regard here.
Okay.
I feel like the easy money was made in the pot stocks. You're going to see bounces. Stocks get oversold. They've been in a little bit of a selling, you know.
Can't trust. Thank you. Can't trust. Gosh darn it.
Can't trust. That was it. So
they all sound the same.
CTST.
Yes, thank you.
It came back off the lows, but look at this, $10 back in April. It's $2 now. I mean, they got issues, you know. And then you can just go through them all. None of the charts look good anymore. So are they gonna? Is it? You know what it needs? It needs a catalyst. They need something to turn the story around. We need somebody to come out and actually invest in these things again, because Constellation investment is not going that well for them. You know, they've go fire the CEO of CGC. Obviously, they're not happy with the performance there, and everybody else is taking note there too. And yes, there's been some smaller investments, but we need somebody to really come in and kickstart it with a confidence booster there to really make this, you know, sector turn around. Right now, it is completely in the gutter. I mean, you can bring up any of these things, any of these stocks here, and they all kind of look the same. They're just straight down. Kronos, $24 back in May. It's $14. Afria was $10 or $11. Now it's $6. They have their own issues. Aurora Cannabis, which was the only one that I owned for a long time there, was $10 back in May. It's now $6 or $6.85. And CGC, which, you know, Kramer has already said best of breed, $52 back in April. It's $34. Is there a point in time where maybe valuation starts to make sense? Yes, but I don't think you're even close to there yet, because when you start looking, it's still, these things are still trading with pretty pricey valuations, and competition's coming. That's my rant on pot. Once again, 2 weeks later, they are lower here again. You know, eventually there is going to be a dead cat bounce, but I think it's nothing more than that. I think bounces are to be sold in these pot stocks.
I do think you underestimate what a major breakthrough on the legislative side would be, either via the States Act, which would really help more money pour into the industry, or via more legalization. And I don't know. I highly doubt it would become federally legal in the U.S. in this administration, but there are a lot of states that have either mixed legal status, or where it's not legal. Some states it's not legal at all, or actually it's just mostly mixed across the board. The majority of states in the U.S. it is mixed. So I think maybe you're underestimating what let's say tomorrow Alabama, Alaska, where it's or Alabama, it's fully illegal. What if they just legal, and Idaho fully illegal, Kansas, Kentucky fully illegal, Mississippi fully illegal? There are about a dozen states where it's fully illegal. If tomorrow they all came out and said it's legal, I think
it's not a catalyst to make them pop in the short term. Sure, you know, and I think, you know, you could be right that could be, but it's going to kickstart them back to ridiculous valuations again. A lot of these companies, I don't think so. Okay. I just think this is kind of how it goes. You know, like with all these growth stocks, they grow, the story is good, the buzz is happening, no pun intended on the pot stocks, and eventually the growth starts to slow. And once the growth starts to slow, that's when you see these stocks with ridiculous valuations significantly come in, because you have value guys like me that are willing to pay 8, 10, 15 times earnings, maybe a market multiple, maybe a little better, maybe 20 times. And then you look at stocks that are trading 100 times earnings, and I'm like, I have no interest in it. So what I call is it's the gap, that you see, and this is when stocks are coming in from when they go from growth stocks to trying to get to value stocks, because there's nothing in the middle. The growth stocks are willing to pay, they're willing to pay any price because revenues are growing. But when it starts to slow, these guys are out. Value stocks guys say no thank you. So then you have a gap in price, and that's when you see the correction start to happen. And I believe that is what we're seeing here now. And that can be significant, like very significant. I don't think like 10, 20%. Sometimes those can be 80, 90% corrections to where value guys will eventually step in. Are these companies worth something? Absolutely. Are they worth 100 times earnings? If they're growing like crazy on the short term, sometimes. But on the long term, valuation does eventually matter. And when valuation matters when growth starts to slow. And I think what you're seeing now is a lot of these companies, the growth isn't there that they're projecting it to be. Competition is coming, and that's why I don't want to own any of them. So could you get some pops from, legislation helping? Could you get some pops if everybody goes legal? Yeah, these are going to be pops. Nothing's going straight down. But I think the trend is not your friend in these stocks anymore, and that's why I'm out.
If we ever get like an actual sustained correction and this bull market ever ends and value becomes back in vogue, then
everything changes.
Everyone like you is going to be like, okay, now these prices look attractive. I'm going to get in on this CGC. So,
and I might, at a certain point, and at a certain point, it makes sense here. Use Wall, and this is, we're going to different examples, but we've been through. I've been investing in this market for 20 years. I've been trading this market for 20 years, so I've seen a few different cycles happen. I saw the tech bubble burst. And at the end of the day, there was some very good value in 2002, 2003, 2004, when those growth stocks that were trading at 80 or 100 times earnings came in, and started to get to reasonable valuations. So would I pay 10, 12, 14 times, 15, 20 times for some of these companies? Yeah, but they're not even close to those levels. So like I said, they're still growing. Some of them are still growing. So it's not like I'm saying these are going off the board and they're all zero. I'm just saying that, if, you break it down, what's the PE on a stock like CGC? Does it make money? I think they might make a little bit.
Yeah, they make money. The PE no, I don't think they do.
So you're just vision, who's buying this? Who's coming in buying this? Because the growth guys are all scared right now. They're running for the hills. And the value guy says, no, thank you. Well, when nobody's buying, this is what you get. You get a stock that falls from 40 to 34 in 2 days, or you get a stock that's down in 2 months, 25, 30%. So, the cloud stocks are still buzzing, and there's no reason to say, okay, eventually this happens with, I believe, all sectors. It's just the, going back, at a certain time, valuation does eventually matter. But when they're growing like crazy, it doesn't. The Twilios and all of them are still got a story. They're still growing like crazy, so they can still continue a lot higher. 10 years from now, valuation might start to matter on those things. Maybe it's 5 years from now. It's when the growth starts to slow. That's when you really see issues happen with growth stocks. You do not want to see the growth start to slow, and I believe that's what we're seeing in the pod stocks.
All right, 8:33. Got about 2 minutes before we bring on today's guest, Dennis. Any notable opening imbalances?
GE, 149,000 to sell. We have a downgrade today of GE. I believe it was UBS.
It was UBS.
Downgrade in stock. I think just a neutral, though, isn't it?
It was to neutral. They lowered their price target to $11.50.
So it's trading down 10 cents on that. It's not a big deal. It's not really moving that much. I'm just looking at other ones here. It's small again. It seems like the same thing. The imbalance has been so boring here, and I don't blame the institutions. You're looking. You don't want to show your hand. You don't want to show really what you're doing here in the pre-market, because there's a lot of traders that are going to move the price on you. So I just don't see a lot here. I don't know if JV Specs up there, if he sees anything really jumping out, but I don't see anything really jump out to me. I'm only looking at the top components, so sometimes you can find some stuff. If you go to the mid caps, I don't trade a lot of mid caps, so I don't look at them.
All right, let's bring on today's guest. Well, a minute early, Eric Krull, manager and founder of Krull Asset Management. He's also the co-author of the book, The Lifecycle Trade. Eric, can you hear me?
Yes, can you hear me?
I can. Good morning. How are you?
I'm doing great. How about yourself?
We're doing okay. Eric, you study the IPO market, and I want to ask you this morning about an IPO that is not happening. The Anheuser-Busch IPO in Hong Kong that was supposed to be the largest IPO of the year. They canceled it last Friday. I was wondering, if you saw that, and what does that tell you?
I did see that, And I wasn't sure I didn't really understand the Anheuser-Busch IPO as it was in the first place. I mean, the stock InBev is already traded BUD in the US, and I didn't know if that was
an
a
IPO.
part.
It was an IPO of their Asian business in Asia.
And so that part is not included in their valuation of BUD, right?
I believe it. You know, I'm not sure. I thought it was going to be like a wholly owned subsidiary type thing.
Yeah, see, I didn't understand it because it wasn't clear to me that they were spinning like a part that was already private becoming public, or if a part of the company was being spun off. So it never made sense to me in the first place. But I'm sure what that means is they're looking at the market for IPOs as not being really great right now, or
That's
maybe
that
maybe
was
a little frothy.
that was my point. Does this say something about Budweiser specifically, or is it more of a market headwind here?
I think it's two things. I agree with you. I think it's a little bit about the market headwind. Maybe they're looking at market at all-time highs. Things are maybe a little frothy in their opinion. And then who knows, maybe something to do with the China and the trade deal and the trade tiff that's going on, that maybe they're not sure how they can actually pull this off. So,
All right.
yeah.
Well, we want to have you on today, Eric, in part because we just came off this crazy quarter for IPOs. I think there were 62 IPOs last quarter, according to Renaissance Capital. $25 billion raised, the most active quarter in 4 years. The Renaissance IPO ETF is one of the top gaining ETFs of the year. So give us your overall take here on what has happened in IPO land in 2019.
Okay, so clearly we've had a large number of IPOs in the first half of the year. But despite the fact that there's been a few that have been marquee ones that have gained a lot, they're not acting any different than they do normally. So, I've showed a few slides here. For example, this one here, 58% of the IPOs, since they've had their day one close, have actually gone down from their day one close to where they're at as of Friday's close. So you look at that and say, well, that's really not that many that have gone up that much. And in fact, if you look at that distribution chart, if you add in the 13 more that have gained less than 20%, you're only seeing a select handful that have gone up a appreciable amount that you can get excited about.
So first of all, the day one close,
Mm-hmm.
is that more significant of a hurdle than the IPO price itself? Or is that just whatever you use to market?
We use the day one close as a standard for measurement because, number one, most retail investors and probably your listeners can't get in at the IPO offer price. We're not being offered shares like the institutions are. So we use a day one close as a standard because you could say like the open, which very few people get in at the open. You can maybe take the mid-range price, but we like to use the day one close because we know anybody can get that price. You trade near the end of the day. And that's a good measurement. So, how does it really act once it hits the street? And we use the day one close as the standard.
So then I guess it would depend on who you asked as far as how the IPO market has been this year. Because if you asked the founders of these companies, they would say, "Oh, it's amazing. We've been able to IPO. The fact that going public is a major accomplishment. So the fact that they've been able to do that is huge. On the other hand, most of the performances have not been great from a secondary market perspective. So how would you grade the IPO market this year, knowing that A, IPOs are good generally, and B, performance across the board has been not as great?
I would say I would grade it as A for excitement and C for performance. If you were lucky enough to get shares at the offer price because you're some sort of institutional investor, you would say it's an A. But if you're a retail investor like myself and most of your listeners, you're looking at it like it's just average.
Eric, it's such a good point you're making too, because I see it on CNBC. They've been talking about how good the IPO market's been. I keep seeing it, like it seems to keep popping up. Best IPO market basically ever, they're trying to tout it as. And when you're coming in here, you're making such a good point. I mean, oh yeah, sure, the stock's up 100% from where the price was, but nobody was able to get in at that price.
Exactly.
Realizing where the people were able to get in at hasn't really been that great. I mean, Uber was $45. Okay, well, it was okay. But Lyft was obviously, opened up at 89 and went straight down from where the opening is. So when you start analyzing really where these stocks opened and where they are now, it hasn't been as good as they're pretending it has.
Exactly. And, Uber's up a little bit from its IPO day one close and a little bit from its opening price, but Lyft is down from the open. And you have Beyond Meat, which is kind of like beyond belief, but you're looking at only a couple stocks, as you'll see in a couple of slides I show here, have done really well, and the rest are, mediocre.
Well, so let's talk about this, Eric, from a trading standpoint. I guess the best way to do that would be to discuss liquidity. So when you point out here that only 19 of these 72 IPOs this year have volume of $20 million per day. So what does this tell you?
Well, for me, and I want to trade stocks that when I make a trade, I don't move the price. And I also want to pile on with institutions. And institutions aren't going to be trading stocks that have liquidity less than $20 million a day. And in fact, many will demand even more liquidity. So for me, the $20 million per day is a minimum amount of volume that a stock has to have before I would consider even investing in it. And just because it has that doesn't mean I go out and buy it. I also look for other things. I look for a well-formed base. I look for good earnings growth, good sales growth, and basic good fundamentals. And I'm showing there are 19 stocks of the 72 IPOs that have come out this year. Only 19 meet the liquidity threshold. And you can see of the 19, there's really only 8 that have posted gains of 25% or more from the day one close, meaning retail investors have really had only like 8 stocks of these 72 that would have been the type of stocks that, number one, they would have been willing to invest in because of liquidity, and number two, had decent gains. And then you can see from the bottom of the list there, many of them have losses. So even though they have liquidity, they're not doing so well. Look at Lyft near the bottom, second from the bottom, down 18% from the day one close. Levi Strauss, another one that got a lot of buzz, that's down 10%. And Uber kind of in the middle, it's up 6% from the day one close.
Do you have any insight into why some of these companies are on this list here? I mean, when you get big names, obviously they're going to have more volume. Uber, Lyft, Pinterest, Beyond Meat, but there are also names like Up FinTech and Jumaya Technologies that are smaller names that have been massively traded. So do you have any insight into why these names are on this list?
Some of them has become a feeding frenzy. They get a pretty good bump up in the beginning, and then people start day trading them, and then they keep doing that. And sometimes the volume starts to level off and fall. And you can see some of them, if you were to actually pull up charts, you would see some of them, the volume has fallen a lot, and maybe they'll fall off this list of liquidity. But then other ones, I think they might, real businesses, real growth, and institutions are, taking a stab at them. And those are the ones I watch. I watch the ones that have the high liquidity, because ultimately they can become super stocks. Now, the one that's most interesting is the one at the top of the list. Until I did this research, I hadn't even heard of it. Do you know what Soliton does?
I don't know.
No idea.
Tell us.
They remove tattoos using a proprietary acoustic technology.
Tattoo removal.
Yes. So I thought, well, that's interesting. Maybe that's a growth industry. For whatever reason, they don't make any money yet. They have negative earnings, but they're up 281% from the day one close, and they're highly liquid.
What was the move, Spencer, when this thing took off from like $5 back in May to like 27? I don't know if you know Eric too.
May 28th, May 29th.
A 2-day move. What was that all about?
Let's find out what happened there. Going back.
Benzinga Pro will have that.
Yeah, the Pro will have it. If I can go back real quickly and see.
I don't know if you know Erica. So it had a 5 to 25. Like,
received FDA approval.
that's the FDA approval.
That's it for their acoustic wave device. There we go.
There we go.
FDA approval. But Eric, is it not a warning sign when you see a name like Up FinTech trade God knows how many shares a day, and you can see that it's being just used as a trading vehicle?
Yeah, I do think for me, I have tried to avoid ones like that. I try to look for ones that have good volume, beginning even in just week 4, that are steady volume players and aren't being pushed around with huge moves. I don't like to see moves of 15, 20% a day up and down. I don't like volatility like that. So I look at a list like this as a start, the ones with high liquidity, and then I drill down and try to see the ones that might be more investable for me and my strategies.
So Eric, let's pretend that you're like asleep for the past few months, and you wake up today and you learn about Beyond Meat. So you missed everything that happened prior, and you're learning about Beyond Meat for the first time today. How would you approach this thing?
The first thing I would do with Beyond Meat would be if I was asleep and woke up, but I'd be looking at the short interest, and I'd be seeing, like, is there a short squeeze potentially still going on here? And I'd also be watching the price and volume action on a daily basis. I want to see is the stock going up in rising volume, heavy volume, or is it going up in lighter volume? And what happens when it goes down? I'd look for support and resistance. But from my viewpoint, based on the amount of sales they have, it reminds me a lot of Tilray last fall, where a very small company in terms of sales, with a lot of feeding frenzy around it in terms of trading. And I'm looking at this one as potential climax top at any day, and then a collapse a little bit like Tilray. That's how I would approach it.
And you can see on this chart here just how drastically Beyond Meat has outperformed the other best performing IPOs of the year. It's not even close here. It's kind of crazy. So I take it you're not a fan of the burgers?
I haven't tried one yet.
Okay.
To me, the biggest issue for Beyond Meat is there are so many potential competitors out there, and I don't know how many more of these companies might go public. But I know you have the big contracts with some of the fast food chains, but we'll see. It's it's certainly something to talk about. It was a lot like Tilray last fall. It has a lot of excitement, but I would be very hesitant as an investor to pick it up here.
How important is volume for you? In terms of secondary indicators, price being the primary one, but volume seems to be one of the numbers you're looking at most.
It is, because when we did the research for our book, The Lifecycle Trade, we found that a stock that had more than $20 million a day of volume was more than twice as likely to become a long-term super growth stock. So it's a big deal for me. Yes, I can trade some stocks in their early phases for more of a short-term trend trade. But if I want to try to get a stock for the long haul with big gains, when you're talking like super growth stocks like Amazon and Apple, and you can name more, I want to find volume stocks, early on in their life cycle, because they're going to be more than twice as likely to be a super growth stock for the future. So you can see here, like since beginning of 2017, you're looking at I think that's only 14 stocks that have 14 stocks that have the volume greater than 20 million a day that have gained more than 100%. So these are stocks that I would be looking at for potential long-term trades. I'd be looking for chart patterns and consolidations and breakouts and things like that for buying. And you can see the two from this year that make the list, the Soliton and Beyond Meat. So they rank right up there with of the ones of the last 3 years, some of the best performing ones. But beyond that, there's none from 2019 that show up on the list.
Is there anything besides the price and the volume that all these names have in common?
In this chart, no, not that I can tell. I'm sorting specifically on price performance from day one close and the volume. And when I look at these, though, I would say that if I were to probably pull up all the institutional investing funds, you would see they probably have more of those funds than the rest of them too.
Do you want to see an IPO being included in ETFs and bought by mutual funds? Is that important to you?
Definitely. I want to see institutional support, because they're the ones who drive the long-term growth of a stock. It's not going to be, individual investors like me and my friends. It's going to be institutional investors.
Let's talk about for the rest of the year here. What are you expecting for the IPO market for the rest of 2019?
I'm expecting a cooling down. I think all the big ones have hit.
Is there anything big coming? Yeah, like what's coming?
I can't think of any off the top of my head that are not come out yet, other than people talk about Aramco, but that's probably not even going to come out this year. The InBev one, the China InBev, was going to be potentially a big one. I'm forgetting the ones that are on tap, but I think for the most part, all the big ones, the big names, the exciting ones have already come out.
Yeah, I think that's what's made this year so unique is all the unicorns that were supposed to IPO last year came out this year. So it's almost like we were playing catch up for the first.
Maybe Palantir was going to be coming out this year. I haven't heard much about that one.
Neither have I. Palantir, it seems like the only notable unicorn. Aramco, you mentioned. Oh, I don't know if there may be one or two, but I haven't heard anything about timelines for those. The Anheuser-Busch one was supposed to be the biggest IPO of the year. They're supposed to raise almost $10 billion. So guess that's not going to happen now. But Eric Krull is the manager and founder of Krull Asset Management, co-author of the Lifecycle Trade. Eric, thank you so much for joining us today, and have a good rest of your week.
Oh, thank you very much. It was great to be here.
All right, have a good one.
You too.
All right, 8:50 now, Dennis here. You were watching the markets more closely than I was over the past 15 minutes. Anything happening that we missed?
It's quiet. We got a quiet day. We slowly just, drifting higher here. It seems like this market just finds a way to do that. Even when it pulls back a little bit, it just starts to drift higher again. And in the absence of news, it just continues. This raging bull continues here. But there's a lot of different drivers. I mean, really, when you look under the hood, like we said, FANG has been a big driver. A lot of those stocks coming back, like Facebook and Amazon, very close to all-time highs. But I mean, you look at even a stock like we've talked about is Disney. I mean, Spencer and I both own this in our long-term portfolios. And, just quietly here, the House of Mouse is actually making new all-time highs too.
That reminds me.
This is in a completely different sector than, your technology stocks. But, and we've talked about the consumer staple strength. I mean, there's been a lot of strength in a lot of different sectors. So the rally is a lot more broad-based. And that's why it's probably more believable.
Thanks for bringing that up, Dennis. You told me to remind you before the Lion King premieres. They had their Asia premiere over the weekend, and it premieres on the 18th, so Thursday. So you told me to remind you next time they have a big live action.
Because there's a run-up ahead of it.
Yes.
I mean, I play the run-ups ahead of these events. I always have. Amazon I owned overnight. Why did I own it overnight? Because Amazon Prime Day. It sounds so silly. To say, okay, I'm going to, buy the stock because it's going to be Amazon Prime Day and it's probably going to go up on Monday. That sounds so simple that 99% of people would dismiss it. Look at Amazon this morning. It's up 11 points, up 0.56% compared to the Qs that are up 0.23%. So you just extract it if you're just just doing it relative to the Qs. You're extracting 0.33% on simplicity. It's the simplicity trade. I've always profited from the simplicity trade, just thinking simple stuff. People get excited. They probably buy the stock on Monday.
All right.
That's what they're doing again this morning. That's what the Disney trade is too, buying it ahead of these big movies, because often you see the big pop ahead of the movie going into it.
Don't say I didn't remind you, because I reminded you on Monday.
So Thursday is the premiere.
Thursday is the U.S. premiere. It's already open in Asia.
Okay. So I should be buying this Wednesday? I should be buying it now because it's already up here.
You're buying it now. You should be buying it.
Disney's hot. Let's look at the book, because when you get stocks making new all-time highs, it's always a good thing to look at the book and see, hey, is there some size we're going to run into? Are the potential sellers? I'm looking and spinning through the book, and I don't see a heck of a lot of anything. It looks pretty thin.
I think the early indicators are that the opening was above expectations in China. So we'll find out what happens on Thursday with Disney. Let's get to the ratings here today, though, because there were a surprising amount, considering we're in earnings season here, or just getting to the start of earnings season. So we talked about the Gilead upgrade already from Wells Fargo. Deere caught an upgrade.
Gilead has went red. So they are hitting it harder, because it's upgraded today. So they're hitting it because they put a big chunk of money, GLPG, not a huge chunk for them, but a huge chunk for GLPG. And we know they don't like, they seem to hit these stocks when they're doing investments. So I actually was long Gilead at one point in time this morning before I started the show. And then I was just analyzing it because it was upgraded and it was trading flat. And I was like, oh, and then I'm like, you know what? That's the GLPG thing though. I'm like, they could take this red. And they did. So I actually turned around and I ended up somehow making 2 cents. But really, I was trying to scratch the trade. And anyways, it was a good scratch because the stock is now red.
All right. Deere DE catching an upgrade of Bank of America this morning to buy Crocs, which I'm always amazed is publicly traded.
Crocs been hot.
Upgraded Piper Jaffray to overweight this morning, CROX.
Yeah, Crocs has been hot for the last month and a half. I guess everything has, but it was going straight down. Awful May, beginning of June was awful, but it's trying to turn around. Now the question though comes, they they're upgrading it now. So is now the time to maybe ring the register here? You were $17.50 here back on June 20th. You're about a month later, and it's $23 or 22 and change. It's been a good run here. You start to run into all these tops you had in May at 22.80, 22.50. That was kind of where you broke down from, and we always like to go back to the scene of the crime and say, okay, well, this is where we really had the big breakdown in May, was from this 22 to 23 area. Now we get back up, and there you're going to have willing sellers probably in here. So I think they're late to the party on this upgrade, and if I was long, I'd probably be ringing the register.
Can you believe Crocs made $1 billion last year?
Crazy.
I can't believe that.
They made I guess they make
made
money.
$1 billion last year. Who's buying these Crocs, and where are you?
I have the knockoff Crocs down.
Where are these people buying the Crocs?
Actually, I don't know if I don't know.
All right.
Stock has not, obviously been a great performer. You go to the monthlies, and you know what, it hasn't been that bad, because it was already in 2017. Everybody had this thing written off when it was $5, and then it had this ridiculous run in 2017 and 2018, went from 5 to 30. So I don't know. Maybe Crocs is back in fashion.
All right. That's it for
better than a lot of retail stocks.
Yeah, that's true. That's true. As far as initiations, one that caught my eye, Slack getting a couple of initiations this morning. The more notable one is Barclays initiating them at overweight, $45 price target, also initiated and outperformed by William Blair. So
this does not rally on ratings changes. It's had, remember the day it had all the upgrades, or not the upgrade, all the initiations to buy.
Well, that was the end of the quiet period, though. So.
End of the quiet period, but again, you're getting a couple more analysts chiming in with buys on normal circumstances that lifts the stock. We saw it last week too. Somebody came in with a buy. I forget who it was. Smaller analyst there last week on, I think it was Friday, and it went down. This stock does not like to rally, when it's getting all this love from these analysts. So what's that mean? It means, well, if it's getting love from these analysts, it can't rally. I don't want to own it. I don't want to own it because the relative strength is just not there. I mean, this chart is ugly. So it's lifting here a little bit this morning. I even tried to play it long here this morning too, early before the show started. I was trying to play it from the long side. So I was like, okay, maybe it's going to show some light, but it starts to fade again. So, you got 40,000 to sell here at the open in the imbalance land. So no institutions are coming in saying, oh, I want to own it here today. I mean, the chart looks ugly. It made a new all-time low, which isn't saying much because it hasn't been out there for that long, just over a month. But the stock has not found really any support here yet. Making new lows. I'd be very cautious owning this.
All right, so many more downgrades today. L-Brand, I'm just going to run through them. L-Brand downgraded Citi to neutral. GE, we talked about, downgraded UBS to neutral. Tiffany downgraded Citigroup to neutral. The big one today is probably Teva. Morgan Stanley is playing catch up. They are downgrading Teva to underweight, lowering their price target to $6 today. So catch up at Morgan Stanley on Teva. There are a few others, but that's probably the biggest one.
Teva has so many issues, and obviously the stock's been a horrible downtrend. Got to $10, quickly rejected the double-digit level. This was back on July the 5th. Been hanging out here for a little bit. Now it starts to get the downgrade. Now you start to think, okay, you're probably going to retest those June and July lows of 796. Rate 85. One thing to consider, this is an ADR, it is trading overseas actively, so price discovery has already happened. It's not like this is the huge move, and it's going to open, and that was going to be more volume. It's already trading actively. So overseas, we're just following it along over here. So I don't think this is like a collapse to 796 here today, but I just think it's hard to get bullish. All these generic jug makers have really been in the gutter. And yes, they've come back a bit from the lows, but you look at Millen Labs, MYL, Teva, there's obviously, I can't think of the other one that I usually trade with those two, but they just haven't been getting the love for a long time. Nope. And you're trying to get there. I can't get interested in Teva until it shows me that it can get above $10 and hold above 10. As long as it's below 10, I think bears are firmly in control of this and rallies are to be sold.
I don't remember if Warren has sold some of his stake in Teva, but we'll find out in a few weeks with 13F day. But regardless, Teva moving hard off that down.
He didn't want it. He didn't want to buy it. It was his other, Joel always says it was
we know
idea.
It was the other guy, blame it on him. As far as other downgrades today, Molson Coors downgraded at Bank of America, Hilton downgraded at Longbow, Marriott also
downgrades today.
Yeah, a lot of downgrades. Agilent downgraded at Barclays. That's pretty much it. A lot of downgrades. I just want to say this real quick. As far as the expected earnings today, this is from our data team here. So today's a quiet day for earnings. 11 notable reports today. We're supposed to get 25 earnings reports tomorrow. We're supposed to get, I can't read that number, let's call it about 40 earnings reports on Wednesday. The big week this week is Thursday, 36 before the bell, 15 after the bell. So Thursday will be
who's the big names coming? Like we know the banks usually are the start of earnings.
We're getting the banks. We're getting here. Let me find it here. I wrote it down.
Give us 5, 6.
I wrote it down for you. So we got the banks. We got Wednesday after the bell, eBay, IBM, Alcoa, Netflix. Thursday morning, we're getting Morgan Stanley, Philip Morris, Honeywell, United Health. Thursday after the bell, Microsoft. So a number of names besides the banks this week. Microsoft, Netflix, and eBay probably being the 3 bigger names. Johnson & Johnson also is Tuesday morning. On that note, that'll be it for today's show. Thank you to today's guest, Eric Krull. Thanks to all of you in both of our chat rooms. Please remember all the information from our show is meant for informational purposes, not to be investing or trading advice. Any questions, comments, concerns, email us, premarket@benzinga.com. Catch our podcast as well on anywhere you get your podcasts. And that's it. So everyone have a good rest of your day, and we will see you on